Welcome back, traders. We've got two currency pairs that we're going to be having a look at today. The first is the British pound versus the US dollar, and the next we're going to be looking at the New Zealand dollar versus US dollar. Now, we haven't touched on the Kiwi very much, so it is quite nice to bring it into the series just so you can have a look around. But if you're not used to trading the New Zealand dollar, it is one of the nicer ones to trade. A little more expensive than the Euro dollar, but we find that the movements are generally quite good, and it's a lot less volatile than some of the other ones, so you can very often pick up nice long-term trades. Anyways, let's jump right in with the British pound US dollar. Now, a few days ago, we were looking at, well, I was looking at this big downtrend coming down. In one of the previous videos, we even used the Brexit Charter and the UK proposal released as an example of how big news events can change the market. And we saw like a massive change over the weekend here, which is quite a big gap for a weekend. You don't often see such a big one. It's usually quite a bit smaller. But that's got a lot to do with the fact that market sentiment can change over a weekend, even though traders aren't in the market to do it. So the value of the currency can alter, and it has. But now we are watching a change in direction. So over the longer period, we've had a fall from all the way up here. What is this? 1.43 and some change, coming right the way down to this point here at nearly 1.3 exactly. So we're looking at a, what's this, 1,330 pips, somewhere around there. So that has been quite a big downtrend, and now we're seeing in the shorter period we're starting to get ascending lows or higher lows, which is signaling a change in direction of the market. If we have a closer look by going to the 1 hour, we can see here that the market came up to reached about the 1.3350 area yesterday, which is quite a swing yet again. I mean, this is over 300 pips over a couple days that it's moved. And then we've seen a sudden short position coming down, and this really rocked it down, and it's kind of moving a lot of our simple moving averages totally out of whack here. But now this would mean that stochastics and all those things are now telling us that we've hit oversold, and we could see that would kick in and now start giving us a long position. What I've drawn in here is an ascending trend line that's following some of the bigger turns here, some of the bigger lows. This one did break through, so we need to treat this as a general area, but we can see that it's happening again after being lined up perfectly with these lower ones. So if the market is changing direction into a bullish position, this looks like we are in the entry point right now off a 1 hour chart, possibly even off the 4 hour chart. So you can go ahead and draw in this line. See if you can spot anything there as well. We're ideally waiting for some candle information to come off another horizontal line at a good point. So if we do see a good candle form here, especially on the 4 hour, we'll pop in a horizontal and see if it's coming off a big level. But let's have a look at our the system, the crossover strategy. Here we go. We're on the 1 hour with the crossover strategy. Now remember, because we can't see the chart quite as well as before, we don't have the movements, so I'm just adjusting this. Now it is a bit clearer. So what we're looking for here, because we have these ascending lows that's been happening despite this one breakthrough here, we're looking for a buy position, which has just happened. Now we look at the buy position and we see that at that point MACD was turning up, stochastic was turning up, but not overbought. So it looks like it wouldn't have been a bad time to enter, but we're going to hold off a little bit. Ideally, I want to see these lines break above the slower moving average that I've got set here at 50, and then it looks like we're good for a long position. Let's have a quick look at the New Zealand US dollar. This one we're looking at on a daily chart, and we can see that we've had an interesting level of support starting from back here. We are in 11th of May, and then it hits around this region again from 30th of October last year to early December, and now we've got something very interesting happening. Let's draw this line in first. Yeah, I'll leave it as green. We can see we're taking it off this point. Then this region here. Now the market came and broke, it's come up and it's hitting again. So now this is where we're going to expect a market to either change to a bullish position or to continue a bearish position. I do feel it's very unlikely for it to continue sideways at this point. So now we're waiting for some more indication as to what is this going to do, and we're lining up for another nice trend. One thing I don't use a lot, but I am going to use here because I have seen a lot of other traders are looking at the Fibonacci levels, specifically from this high point down to this low point. There we go, let's get that in. And now this is going to give us a few extra places where we could expect the market to turn. So what I'm doing here on the New Zealand US dollar on the daily, now this is daily, so you only have to check it once a day. Although I do have a habit of checking it a lot more than that, is we're going to be looking for a turning point off here. Now, by following the lows, we can see we have a low at this point. I'll mark that off. Then we have another low that's formed over here. So we have lower lows. And if we're looking at the highs, you know, we'll find a high in this region up here. And then we'll find another high over here. So we've got lower highs as well. So purely off the price action thing, we are saying that the market should continue down unless this price level breaks this high, which would then signal that the market could be turning up, but we still have lower lows, so we're undecided. Currently we are still looking at a bearish market, so we want to see some candle information, very much like that candlestick is just formed there, telling us that we're going to be entering a short position. Now if we go and line this up, yeah, it looks like that's not a bad short. So since this is a demo account, I'm just going to go ahead and enter it here. I usually don't enter trades while recording because I can't pay as much attention to everything as I'd like. I'll just pop it in for one lot, and then tomorrow we'll see what happens. If it's a losing trade, then we'll talk about how to get out of the trade. If it's a winning trade, then we'll go through fun things like how to split the trade, cash some of the money, move on, or perhaps even increase our position. So I'm going to go ahead and hit sell. Now, since I said the market would need to break this high in order for us to say that the market is now undecided, that also means that we can go ahead and set our stop loss at that level. I need to accept these terms again. So I'm going to set the stop loss at this level. That means if the market comes and hits that, we are no longer that confident that it's a bearish market, so it's a good time for us to get out of the trade. Now we're looking for a target to hit, but since the market has not been in this price range for a while, it looks like the next targets would be about down here. So I'm going to go with the old-fashioned way of doing it, where what we do is we measure from our entry price to our stop loss, and we're saying that's 113 pips. That means that I want to set my take profit at least that much. In fact, yeah, let's go for this bottom here. It's just over the same amount that we're risking. Ideally, you want to target as much money or more than what you're risking. Cool, guys. So let's watch this trade over the next day. We'll see what happens. It looks fairly good. I'm not going to keep watching it personally. I'm just going to log in tomorrow when I do the next video, and we'll see what happens. Have a great week trading, folks. See you soon.